This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices edged up on Thursday, taking a break after major losses in the previous session, as investors weighed concerns about global oversupply with looming sanctions against Russia's Lukoil. Brent crude futures rose 32 cents to $63.03 a barrel by 11:30 GMT, after dropping 3.8% a day earlier. U.S. West Texas Intermediate crude increased 28 cents to $77 a barrel, after a decline of 4.2% on Wednesday. There should be considerable support to oil prices around $60 BBL, especially given there could be short-term disruption to Russian export flows once stricter sanctions kick in, said Suvro Sarkar, DBS Bank's energy sector team lead.
Russia's revenues from crude oil and refined products fell again in October due to lower export volumes and weaker prices, the International Energy Agency said on Thursday, adding that Russian oil exports have been holding up so far. Russia's vital energy industry is under strain from a pickup in Ukrainian drone strikes on oil refineries and pipelines, as well as Western sanctions over Ukraine. Washington has piled pressure on Moscow by introducing sanctions against Russia's largest oil producers, Rosneft and Lukoil, last month, setting November 21st as the deadline for winding down transactions with the companies.
Moving on to the top news in the energy sector.
The global oil market faces an even bigger surplus next year of as much as 4.09 million barrels per day as OPEC Plus produces and rivals lift output and demand growth slows, the International Energy Agency said on Thursday. The outlook from the IEA, which advises industrialized countries, is the latest warning that the oil market is heading for oversupply. A surplus of 4.09 million barrels of oil per day would be equal to almost 4% of world demand, and is much larger than other analysts' predictions. Global oil market balances are looking increasingly lopsided, as world oil supply is forging ahead while oil demand growth remains modest by historical standards, the IEA said in its monthly report.
Australia risks undermining efforts to establish itself as a leader in the green energy transition and letting down its vulnerable Pacific Island neighbors if its bid to host next year's biggest climate summit fails, diplomats and analysts say. Australia was long considered the front-runner to hold the COP31 conference, aiming to bolster its ambitions to become a renewable energy superpower and highlight issues faced by Pacific Island nations which it plans to co-host the conference with. However, Turkey doubled down on a rival bid, saying it wants a summit that more directly tackles financing for developing countries' climate efforts while showcasing its own progress toward a 2053 net zero emissions target. Next, we have the top news in metal markets. Chinese copper exports are on pace to set a record in 2025, with October shipments set to exceed 100,000 metric tons for only the third time ever, as rising domestic supply and higher foreign prices spur outflows. China is the world's largest copper consumer and a net importer of the red metal used in power lines, construction and manufacturing. But its smelters are producing more refined copper than ever, and exports, with their higher margins, are increasingly attractive to offset losses from record low processing fees. Last month, China likely shipped out at least 100,000 tons of refined copper, according to forecasts from two industry sources who track the cargoes.
European aluminium importers are racing to secure supplies of the metal following an outage at a key smelter in Iceland and before a new carbon tax comes into force, pushing premiums to a 9-month high. The European aluminium duty paid premium, which buyers on the physical market pay over the London Metal Exchange price to cover taxes, freight and handling costs, is currently at $324 a ton. It hit $330 on November 3, the highest since late January. The 320,000-ton per year Grundartangi smelter in Iceland, owned by Century Aluminum, cut production by 2/3 in late October due to electrical equipment failure.
We will now look at the top news in the agricultural sector.
World coffee prices steadied on Thursday after sharp falls in the prior session as dealers awaited details about potential U.S. tariff reductions or exemptions on products that cannot be grown in the country. Brazilian Foreign Minister Mauro Vieira met with U.S. Secretary of State Marco Rubio on Wednesday on the sidelines of the G7 meeting to discuss progress in ongoing tariff talks, according to a diplomatic source. The news came a few hours after U.S. Treasury Secretary Scott Bessent said Americans would see substantial announcements in the coming days aimed at lowering the prices of products not farmed in the U.S., like coffee.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.